Welcome to this video. Today we're going to talk about Cloudflare because a lot of websites are down right now and there's a lot of chaos. And when there's chaos, there's opportunity. So Cloudflare is a company that helps secure websites through their cloud services and makes them also load faster. So today there was a massive outage and we can read the news here. Cloudflare outage disrupts ChatGPT, X and other internet services. So massive websites are down. Outage at Cloudflare disrupts part of the internet and many internet services disrupted after Cloudflare warns of service issues. So could this affect the future of the company? Or could this be a great buying opportunity? In this deep dive stock analysis, we're going to find the truth. So without further ado, let's dive right in. So this is essentially how Cloudflare works. More than just content delivery services, CDN, customers rely on Cloudflare Global Network to enhance security, performance, and reliability of anything connected to the internet. So Cloudflare is essentially between your website and the internet, and it helps as a barrier of security against malicious traffic like bots and crawlers and hackers. For example, X uses Cloudflare to get rid of the bots and the hackers. And Cloudflare doesn't only protect, it also makes it more fast because it has many different servers around all the world and you use their whole network for your website. So it doesn't matter on which place you are in the world, you have fast connection to the website. So it helps for speed and for security. And Cloudflare has big customers, so it's a massive company. So we're now looking at Cloudflare net on TradingView on the charts, and we can see that it's in a technical uptrend. And we can see higher lows and higher highs. And the 50 EMA is above the 200 EMA. And we can see that the news, because of the outage, it went down -7% and now it's -3.5%. It's going back a little bit up because many websites are back online again. So the problem is essentially solved. So could this be a good buying opportunity? Before we know whether this could be a potential buying opportunity, we need to know whether this is a strong fundamental company and whether it's still undervalued. So here's a quick financial overview. We're now looking on Guru Focus, and we can see that the financial strength is not that high. The cash to debt levels are okay, but it's not. They do have some debt. And we can see that the profitability rank is only 3 out of 10 and their net income is still negative, although much better than before. And the growth rank is a 9 out of 10. They're in a high growing industry. And if we look here, we can see that the revenue is increasing every year, which is great, but the net income is still negative. And that's a concern. So this is not like your Nvidia. This is not like your Google, Nvidia, Amazon. This is not the most strong company. So when it comes to cash to debt, not really a problem. They have a little bit more cash than that. So in conclusion, I think based on this quick overview, I think it's an okay business, but doesn't have the strongest financials yet. We know this isn't the strongest fundamental company. It's not like your Nvidia, but it is in a strong growing industry. And the internet is like the future. It's right now. And everyone is using it. Because it's not the strongest fundamental, we should not just buy this company directly, right? And that's why we need to know whether it's cheap or expensive. If it's really cheap, we can still buy and make money. But we are now looking on alpha spread and we can see that the intrinsic value according to alpha spread is $27.89. So it's overvalued by 86%, which is, really overvalued. And if we go to the best case scenario, then it's still overvalued, then it's $40. So according to this website, and they use a discounted cash flow method and a relative value, and they take the average, it's super overvalued. So here's like a second opinion. We're back on Guru Focus, and even Guru Focus say that it's significantly overvalued and that the intrinsic value is like at the black line, and it's much above that right now, according to this site at least. So perhaps these models that these financial websites use could not be accurate because they are not profitable yet, but they still have a lot of intrinsic value. So we can also, for a third opinion, we can also look at the price to sales ratio. And the price to sales ratio is the price divided by sales. So market cap, which is the price, divided by revenue, which is sales. And if we compare that with the competitors, we can see whether this company is cheap or expensive. So here we can see the price to sales ratios versus the competitors. And we can see that Cloudflare has a approximate price to sales ratio of around 40, which is extremely high in any regard. If you compare to any company, almost like 40 is really high. So very high relative to competitors implies investors expect strong growth. So there is strong growth expected, but it also shows that it's a little bit overvalued and these others are much lower. Cloudflare is a company that helps websites run faster and more secure, and many big companies rely on this company. And that's what makes this company very important, but the fundamentals aren't so strong. But the good thing about Net is that it is on a strong uptrend, so the technicals are in your favor. And it's now retraced a little bit, but you're also buying a high price because it's pretty overvalued right now. The intrinsic value is much lower, and even if we compare to the price to sales ratio, we can see that this company is relative overvalued. So I'm personally not going to buy this company. I think it's too expensive. For me, it's okay if they're not profitable yet, but then the company needs to be really, really cheap. And right now it's not. So if this company, if there's more panic and something happens and it drops more lower, then it can be more interesting. But right now, a lot of companies are down. The S&P is down. So I would say that I think that Amazon personally is a better buy right now. For example, they have also Amazon Web Services. That's their cloud service. I think this company is much less risky than Net. Or Nvidia could also be a good potential buy at the moment. But of course, always do your own research, always do your own due diligence. I hope you learned something. If you like this kind of content, feel free to like and subscribe. And I'll see you in the next video.